Hello guys, welcome back to the channel Gyaan Valuable. Today in this video, we'll be discussing about another multi-bagger company, which is Textile Chemical Limited, which you can see on your screen. And sorry for a long time I have not posted any video because I have some personal commitments. So apologize for that. But yeah, now I'll be back, and so there will be continuous videos being uploaded on the multi-baggers episodes. So yeah, in this episode we'll be discussing about Textile Chemical Limited. So let's begin. So yeah, first we'll be beginning with what the company's business is all about. So the company is a chemical manufacturer. It's a very big specialty chemical manufacturer. Mainly, it is focused on textile auxiliaries. The business model is like they manufacture all these chemicals which is required for the textile industries. So I'll take you through the website of the company where you can see how the textile industries uses the chemicals. So it manufactures that is the raw materials for a textile industry. So like you can see a dyeing processes, it provides all the chemicals which are used for dyeing process. So pre-treatment process, you can see what are the list of chemicals which it provides. And again the printing process, you can see so in that also there are multiple products which they provide as a raw materials. So all these textile processes, they provide the basic ingredients, that is the raw materials which are most widely used for these processes in the textile industries. So this is the basic fundamental of the business what they are majorly into. And also they have diversified their businesses. Like you can see they are also manufacturing some floor cleaners, sanitizers, dishwashers. So all these stuffs which are not major contributor to their revenue, but they are also into it. And they have diversified into oil and gas as well. They have some subsidiaries acquired. So also water treatments and many other stuff. So major revenue contributor is only the textile chemicals area. So this segment is more focused by that is what the niche area where the company operates. And then now coming into the balance sheet of the company, we'll analyze what is the fundamentals, how they look. First, you can see here it's a 2,800 crore market cap with current price of 24 per share, and there is zero debt. You can see debt is zero, debt to equity is also zero. It is a debt-free company, which is a very big positive sign of the company. Coming to the profitability statements, that is the quarterly results, you can see over the years they have been crossing around. The revenues have been around more than 100 crores, and here it was somewhat slow down in the year of 2025. Now in the December quarter, it has again picked into the highest ever revenue which have been posted by the company. It is 184 crores, which is a very good thing, very good thing. It has consolidated over the years. Now it has really done a good thing in increasing its revenue with a good margins. You can see there is a good decent margins as well, and the net profit is at around 30 crores. So this is fundamentally a good results which they have posted in the December quarter. Let's go ahead from here. The balance sheet, how it looks, you can see the reserves are 756, which is as usual, it's a profitable company, so every year the reserves will rise. And the fixed assets, you can see the major plant and machineries which the company operates into. So that is what the major plant and machineries are about. And investments, the companies have major investments in their that is mutual funds and some other small subsidiaries which they have invested. So that is as well a good sign. And other assets, you can see here majorly will be include inventories, trade receivables, cash equivalents, and all other advances, you can see. So all these are, it's fundamentally a strong company, so nothing to analyze in deeper. So it's fundamentally a debt-free company. It's a very strong company fundamentally. And operating activity, there is a positive flow, and investing activity, you can see there is a negative flow because the company has heavily invested into a new expansion projects, and there is new plans have been that is created by them. And so that is what they have spent a lot of amount on the expansion plans. So you can see the investments which have been purchased are about 203 crores, fixed assets 68 crores. So all these stuffs. And the net cash outflow, this might be the dividends payout, because this company also pays a good amount of dividends. I think, yeah, they have more than 9 crores of dividend outflows. And some proceeds from shares, because they have I think last year they have split their shares and some preferential shares were allotted, I guess. So that is why they have some proceeds from the shares. Fine, that is not a big thing to worry about. Next thing, we'll see what is the debtor days looks like. The debtor days have improved, and inventories is also improving, but somewhat of slowness they have faced in 2025. You can see how the year has gone. Inventory have not been sold properly. Days payable is also a good thing. Yeah, then total working capital days is 104, which is somewhat difficult for the company they have faced in the year of 2025, which you can see here, and that is have reflected in the share price as well. The share price have not yet performed properly in the year 2025, but let's see how these metrics increases. So in 2023-24 the working capital was fundamentally good. Now in 2025 it is somewhat increased, which is not a good sign, but they should improve in this. They will improve in this. ROCE as well, you can see there is a somewhat of slowdown in 2025, but I think 2026 has been fundamentally a good year for them. So in the year, how the shareholding pattern have changed, you can see the promoters have remained same, but they have somewhat sold off their shares in December quarter, in January quarter, but eventually FIIs have increased their portion. You can see from September it was declined. In December it was 2.53. In January it is 2.95, which is it is a very good thing that the FIIs have started investing in these companies a little bit. DIIs have maintained their share. So in September quarter, of course, there was a slowdown in the year 2025. So the DIIs were selling off their shares. Now they should come back to the company. And the public holding have also reduced over the past 2 quarters. You can see public is also not interested. So these types of companies, we need to be very much attentive that when the public have removed their focus from a company, that is the time when you need to take the step ahead. That is from the rest of the retail investors. When you see such scenarios where FIIs have increased or any institutional portion have increased and public holding have substantially reduced, that is the moment where you need to step ahead and take the risk. So these types of companies, when it outperforms, then the public shareholding will increase. So these companies will come in the limelight at that point of time, and then you can invest in that company. So fine. Okay. Then what else? Coming to the share performance of the company, how it looks. So I have just entered into the that is what is the intrinsic value of the company, what are the steps expected, that is how the company is expected to work from there, and decent way. In a short term it is expected for an upside of 16%, which is a decent amount. I think this will definitely provide this basic returns, and medium term it will be around a good 30 to 50 rupees per share, and long term it is a good long term company where you will be finding wonderful returns from the company. So yeah, this is what all about my analysis here, and hope you liked the video. So please subscribe to the channel Gyaan Valuable, and please comment your thoughts on how I can improve and what topics you want, so that I can just work on those topics and give you a good presentation on them. So thank you so much for watching. Goodbye. Happy investing.